Hello, welcome to Cryptonomy. Today we're going to be discussing Bitcoin versus the S&P 500. What can the S&P 500 tell us about Bitcoin to finally have a more complete picture? And we can never really have a complete picture, but we're trying to get it as unblurry as possible, right? First, my name is Mo. I'm a computer and data scientist. I've been a crypto investor for the past 6 years, and I was able to turn a small, humble portfolio into 6 figures this cycle. So if you want to know how I did it and learn some of my mistakes, because I've done a lot, right, to get to the point I am, then please maybe try watching this video, and if you enjoy it, please leave a like and subscribe. So today what we're going to be discussing is basically the S&P and where we are right now in the S&P cycle, and what does Bitcoin do usually in the phase that the S&P is in right now, right? So I can't help but compare this to the 1999 2000, because you're seeing a similar weakness. And if I just show you a snippet, a photo is better than 1,000 words, so maybe you will start to see the similarities I'm seeing. So if we go and take the snippet from the around the 82, starting from the 1982, if we take a bars pattern from here to here, see? And if we just overlay it over our current cycle, you just can't help to see that it's too damn similar. All right, way too damn similar. You can even see that the wick right there, it was similar in time and magnitude to the wick previously. And the thing is, before we might have gone over it and below it and consolidated within those, but we always came back to the same similar cycle that prior to the 2000 crash, the bubble.com, right? We were just rhyming with the previous cycle, right? And we always just came back and reverted to the mean, right? In a way. Right now, it's a carbon copy. It is a carbon copy, right? From since the 2022 cycle till now, we're at the same level, and we've had similar drawdowns, as you can see here, there. We're seeing similar rallies and drawdowns that may be a little bit more longer earlier, but there are a lot of similarities, right? So after the 2021 crash, what I feel here is like we're reminiscing, we're foreshadowing what's about to come. And I'm not saying we will have a bear market similar to the dot-com bubble, even though that might be possible, since we have a similar scenario right now with the AI bubble, right, that everybody's talking about. And sometimes narratives, when people discuss them enough over time, they do become realities. It's called confirmation bias, right, in psychology and and so on. Um, so yeah, it's pretty interesting. That's why I cannot help but compare it to the 2000 cycle and the phase right now. What if we assume that this is a possible theory to work out? Then what we're gonna see right now is a period of weakness. That's what this tells us, right? We're seeing a period of weakness to come. Now, the further we get in the pattern, the harder it is to predict. That's why I like to just predict in small chunks, and maybe the time will come. We might see something maybe less severe, lower in magnitude. As you can see here, we, for example, had here it was consolidation, and then we had a rally. Here we saw something different, a larger rally, but at the end of the day, we just came back to the zone, right? So I wouldn't be surprised if we see, even though my base case is not an extended bear market cycle, it's just something to consider, right? That we might see something like a little bit more shallower in magnitude. But what I'm really focused on and what I really care about is this zone right here, right? So just to give you an idea of what happened there during that period, and this will relate to Bitcoin, right? So we're gonna take uh, our idea, and we're gonna see if it has validity here, and then we're gonna just see how it can teach us something about the Bitcoin cycle currently, right? So this cycle, this period was pretty boring, right? It was a lot of shop, and if you, for example, check from the 1999, it lasted around, if you take this, it lasted around like almost 2 years. This is a little bit over of a year. And we just went up 20%. Nobody wants to hold for like around 2 years for just a 20% move, right? That's just depends on your goals, but for me, that's not what I'm looking for, especially if I'm investing into Bitcoin. In 2 years, I do expect my capital to 2x, 3x, 4x, or not 20%, right? Of course, everybody has different goals. And before we continue, nothing is said in this video is financial advice. It's for education purposes only. Please, before making any major financial decisions or even simple ones, do your own research, watch a lot of other videos, and you know, draw the picture, your full picture of what you want to do, right? And what do you think is going to happen based on probabilistic scenarios. Never be too sure, right? So yeah, if we expect to see some kind of weakness, what does that say for Bitcoin, right? And I'll tell you what history says. Okay, so if we take Bitcoin's price and we compare it to the previous cycles, right, the S&P cycles, we can see that the Bitcoin top does happen a little bit earlier than the S&P top. That's one thing that recurs over and over and over. The second thing you'll notice from history, and some examples here, of course, will be shown, when the bear market for the stock market happens, the bear market for the Bitcoin definitely happens, right? Definitely. Every single time. That's historical speaking. The future can hold different scenarios, but historically, and I'm a market speculator that studies history and makes his decisions based on history and gives it probabilistic outcomes, right, to different scenarios. That's how I stay profitable, and that's how I try and have my edge. So yeah, I'm gonna stick with history, and of course things can play out differently, but history has been playing out well for me. So you know, if it's not broken, I'm not gonna fix it. If that says the bear market for the stock market happens, Bitcoin market will also have a bear market. And one thing about the stock market is you will notice that the 4-year cycle also works, and we're going to discuss it, especially in the 1970s period where it was like very accurate. Right now it is less accurate. It is early some years, late some years. But one thing that keeps recurring, if the stock market is early or not, doesn't matter. If the stock market sees some weakness, the Bitcoin, the crypto market as a whole is gonna, especially the Bitcoin as well, will see a decline. Not a weakness, it will see a decline. This is what history says. You don't need to look further than 2019, and that's not even a bear market, right? If we just get rid of this snippet, right, I think we got the idea from there. You'll see that the stock market during the 2019, which is, by the way, the year, right, if we put up the money supply, or two, no, not that one. Okay, it's fine, but there was quantitative easing that period, and the stock market did see strengthening, right? That was the COVID crash, but prior to that, we did see strengthening for the stock market. But nevertheless, Bitcoin saw a decline. All right, it did not consolidate. It did not see strength. Even if you just even focus on that zone right here, we highlight it, it will be even more clear, right? The stock market was going up while Bitcoin was going down. See, that was going up while Bitcoin was going down. And that's during a quantitative easing period that happened around this area, right? Sometime in July. And yeah, so when there's not every time the stock market goes up, Bitcoin will have to follow it, right? So that's also one risk we have to consider. And here you saw the stock market see a decline, but also strengthening here, right? So the stock market wasn't really having a bear market per se. I wouldn't classify that as a bear market. That was around 3 month. And if you look at Bitcoin, we will discuss this as well, the rising wedge. It has a 6-month period of doing nothing, and you could say even decline, right? 237 days. So I wouldn't classify it as a bear market, as we did make higher highs, but we did sweep the lows as well. That's why it's this. It is the period of the cycle, the 4-year cycle, where the stock market does actually see weakening. Not a bear market, not a recession, not major declines. You would call that major decline? Definitely. We had some major declines, but not bear markets. We saw some weakness, but the Bitcoin saw a crash, an absolute devastation, right? So that's the first thing we can see. And usually the top here happened again earlier than the stock market. The stock market had a pretty nice rally before the crash, right? But Bitcoin did sense the weakness, and it applied it to the price before the stock market anybody even noticed. I mean, here they were hyped up. Here we were devastated. So crypto people are smarter, right? Yeah, so that's comparing it to the 2018 cycle, right? We can even go further and get a sense of what we mean with weakness, and crypto sees the crash, because in the 2015 example is perfect for this. Here, this period, the stock market saw an absolute nice run, right? But here we started to see a shift in regime, right? A shift in tone, and we started to form a weakening, right? If you think of it as that, these lines, let's pick up a nice line instead. All right, if we compare it to that, got that line and just some neutral color, then what do you notice is that Bitcoin did have the top earlier than the stock market, right? It saw the top before the start of the weakening period, of the shift of the regime for the stock market. And Bitcoin did see the decline. And the stock market just kept going higher for some period until reality caught up. And then finally, you did see some form of weakness, like real weakness. And I would even call that as a bear market, because it was extended and you did not make higher highs, but you made kind of lower lows, right? So I would classify that, at least in my opinion, as a bear market. So that was around 390 days, 1 year, and we did see a nice decline. That was around 15%. Not too bad, to be honest. Not too bad for the stock market. For crypto, that's just another Sunday. So it is interesting to see that we're at a period where the time for a stock market weakness begins, and the time for a crypto bear market also begins. And we have pretty good examples, 3 examples in a row, that tell us or foreshadows of what's coming. Therefore, I would be cautious not to give the 4-year cycle validity, or give it an above average probabilistic outcome for it to occur. Because if you also look at and this has blew my mind in a way, right? But if you also look at the stock market over the money supply, you see the same picture being painted. And this is something that Benjamin Count pointed out a long time ago, and he speaks of it often as well. Ever since he pointed out, I couldn't just not track it by myself, right? If you take a snippet of, I would say, like, sure, this area, right? And if you take it here, you put it around somewhere here, and you would see that even that drop happens at the same time, right? Even that drop and to the same magnitude, right, between these two lines. Here. It's pretty interesting that everything is lining up at its time. And what here we're saying is that the stock market will see weakening in relative to the money supply. And just funny enough that they are starting quantitative easing. Everything is lining up to in a way that fails to convince me that we're going to have an extended cycle in a way. That's why I'm in the bear market camp right now. One more thing that we discussed in a previous video is this rising wedge. Now, the rising wedge is an interesting pattern because it often happens in bear markets, especially at the start. And if you do some research online, you understand that this pattern breaks to the downside 60 to 70% of the time. And the third touch of the either the resistance or support means that line is about to break. The third touch. The fourth touch is most likely. The fifth touch is most certainly with like some kind of probabilistic degree, of course. Rarely it goes over 5 touches. If you do some research about this pattern. And the things that I'm waiting, if we say like to confirm that outlook, the first thing I want to see is a break, and that will be for me probably a good sign to start positioning myself to short. Now, of course, this is not financial advice. This is what I'm doing personally. But if you're thinking, for example, of selling, I would consider definitely using that area or suggesting that look into it, right? But to confirm the downtrend, I would want to see one of these things happen after we actually break. So I'm looking for increased volume, of course, negative volume, continuation candle, which usually looks like that, right? But of course, this needs to happen in certain situations, like after a major break, and I'm looking for 2 of these things to play out for me to be even more convinced that we're going to the side. So increased volume or continuation candle, for example, or retest of wedge and increased volume. And if all 3 of them happen, then that's just increases my probabilistic chance. So our retest of wedge would look something like that, and then something like that, right? Increased volume, we said here, and continuation candle is just a big candle, right? So that can be defined as to have the size of 1.5 to 2x, right? That's a 5 in a way, of the size of the previous candles within the same zone. So I want to see just bigger candles than those and those. That would be sufficient for me. And another thing that actually lines up with our analysis is the fact that we analyzed the every leg down move in every bear market, right? And we took all the statistics and we formed this zone in a previous video, right? This is all the statistics. And we analyzed the current phase. And this phase, historically speaking, is about to end. This is usually the strength you see in December. And we usually hit the bottom of the range in January, end of January, February. So this aligns with this end of January, February, which is nice. Of course, everything is measured from this peak to form this box, and we usually retest this, right? So this is the level I'm looking at. Yeah, where I would start to see sorry, where I'm expecting the break to happen. Of course, this is all speculation and nobody knows what's going to happen, but this is what I'm leaning towards from the analysis so far is maximum by the date the DOJ raises interest rates. And this is a significant event because you don't need to look so far to see what happened when the DOJ raised interest rates previously. This was the largest liquidation event in crypto history. I think events like this people like to pinpoint major turning points on major events like that, right? Or it could be, for example, when the Fed cut interest rates, it was right here, and that seems to be what's playing out so far. But I'm probably going to extend to this zone as well. I'm not rushing. We need to see confirmation. This is what I think, the stock market versus Bitcoin, and how it fits with our previous analysis, how everything comes together. A lot of pieces of the puzzles are pointing in the one direction, but I just want to inform you that please do trade safe. There are, yeah, we talked about several factors here, but there are many that we don't actually know, right? And of course, anybody can be wrong. I hope you enjoyed the video. If you did, please like and subscribe. Tell me what you think in the comments. Yeah, I'll see you next time. Bye bye.